Thank you for joining us on our webcast series for fund managers and investors. Today's episode is focused on the commonly asked questions surrounding investment fund banking and administration, and the key role administrators and financial institutions play in the ongoing operations of a fund for the managers and also their investors. I have two guests with me today. We have David Madden as well as Nick Neary. David Madden is with Wintrust, and he is the vice president over there. He has 20 years experience in the financial services sector, having held multiple roles in accounting, operations, relationship management, and business development. He has worked for several large institutions, including Neuberger Berman, Morgan Stanley, UBS, JP Morgan, and most recently, he's now at Wintrust. Working for the Funds Group in New York, David and his team focus on providing premier banking services to the alternative investment community, and he holds a BBA in accounting and an MBA in finance. David, thank you for being here. I appreciate it.
Thank you, Jen. Thank you for coordinating.
And then we also have Nick Neary. He is the Vice President over North America and Cayman Islands for Circle Partners Fund Administration. He brings 25 plus years of industry experience within the traditional and alternative financial markets, and he's responsible for the overall planning and execution of the U.S. business development strategies. At Circle Partners, they're a leading independent fund administrator established in 2000. They provide a comprehensive range of administration and corporate services to hedge funds, funds of funds, real estate funds, private equity, and cryptocurrency funds. They have offices in 8 countries, over $10 billion in assets, and they offer a boutique approach, combining local presence and a global reach. So Nick, I really appreciate you being here as well.
Thank you, Jen. I appreciate it, and thank you so much for putting this webinar together.
Absolutely. So David, I want to get started first with you. If you could just give a little insight into what you do at Wintrust and what financial institutions that specifically cater to investment fund managers provide.
Absolutely, Jen. Again, thanks very much for putting this together. I think choosing the right service providers in the beginning for any manager, or existing or new, is kind of key to beginning the launch of any fund. Beginning just with law firms, then down to banking through fund administration and auditing. So just picking the right service provider from the start in all areas, I do think, is key. One of the areas, obviously, is the banking side. Who I work for is the Wintrust Funds Group, and who we are and what we do. Wintrust Funds Group is part of Wintrust Bank, which is a $38 billion bank. We're publicly traded with over 5,000 employees and 175 branch offices. What we do and what we do well is we provide banking services for the alternative investment folks. That includes hedge funds, private equity, real estate, and VC firms. So we work very closely. We use some of the latest technology out there. And again, our core goal of our group is to provide services for specifically this investment management space.
Perfect. And Nick, along those lines, with fund administrators, most managers understand the broad overview of what an administrator provides, but there seems to be a lot more that your services encompass. Can you give us a deeper insight into the role you play at Circle Partners and what you guys bring to the table for managers and their funds?
Yes, absolutely, Jen. Appreciate the question. So maybe I'll give you a little background on Circle Partners first, and then I'll go into some of the transparency, oversight, and compliance that we provide for our investment managers. The Circle Partners was formed in the year of 2000, actually out of Citgo. Presently, we're in 10 countries across the globe. So we're in Europe, we're in Asia, in Hong Kong, Singapore. We're in Zurich, Lux, Cayman, BVI, Curacao, and then obviously here in the U.S. market. The team is consisting of about 135 employees across those different jurisdictions. And we kind of travel the sun in a sense where we have locations across the globe so that we could service our clients in an appropriate time frame within those markets itself. Getting to understand a little bit more about Circle Partners and administrators and what we do, it's imperative to really understand that an administrator is really an independent organization that has a fiduciary responsibility to not only the fund manager, but obviously the investors investing within that fund structure. So as an organization, we provide transparency, we provide oversight and compliance while becoming essentially an extension to that fund manager's back office. So instead of an investment manager hiring an entire team to do their cash management, like the reconciliation, the trading activity itself, manage the subscriptions, the redemptions, they would hire an organization as ours, which would be a back office admin. Our organization really focuses on a couple of pieces that David touched upon. Obviously, one being cash management and the cash management services, which is essential to any fund manager. And choosing the right banking institution like Wintrust is also essential based on the platforms, their knowledge, their experience within the industry itself. So that's a key role that we also play. We actually conduct some of the cash movements on behalf of our investment managers. We provide also anti-money laundering and KYC oversight. So as subscriptions come in, we review those. We also provide investor relations. So those sub-docs, as I was just mentioning, those get reviewed and are then held on file. We also do the accounting and the administration, meaning like trade reconciliation. So as an investment manager is trading, so say, for example, they're using a standard brokerage firm, we would reconcile those trades to make sure there's no breaks, and then we coordinate tax and audit. Now, Circle Partners, as I mentioned, we have about 135 employees across the globe. We are audited by KPMG, so all of our books and records are reviewed on a consistent basis. And then we become a true partner to any investment manager that we're working with as that extension of their back office. So hopefully that gives you a little bit of an overview of kind of what an admin does, and there are all different scales and levels of administrators within the market itself.
Perfect, thank you. And I think you touched on a couple of really key words there, transparency and oversight. I think that making sure you hire a really solid and strong administrator is important because investors want those two things, as much as any of the other factors. They want that transparency and they want that oversight. And so having a good fund admin can help alleviate some of those concerns. David, one of the biggest questions I get asked is, why are there so few banks that cater to investment fund accounts? And, just a quick little follow-up to that is, what type of accounts typically get opened by your bank?
Yeah, that's a great question. And you're right. A lot of banks don't necessarily cater to the investment manager community. At Wintrust, we do. And what we do is we open specific accounts for their needs. Those accounts include subscription redemption accounts, operating accounts, and excess cash accounts. So due to banking regulations that have happened over the past prior years, a lot of banks have found it just simply unprofitable to work and don't want to work with the alternative investment community. That is because, and a reason why we rely on the fund admins for partnerships is these subscription redemption accounts that get opened at Wintrust. And what happens there is, in partnership with fund admins like Circle, Circle has the ability to monitor all the LPs that come in and out of a specific subscription account. subscriptions redemption account. That means that the account that's open in the management company's name has all of a sudden all of these third-party investors coming in. From an AML, American Money Laundering, KYC, know your client perspective, those wires need to be tracked. Somebody needs to say, okay, all of these investors coming in, yes, they're good guys. At Wintrust, we rely on our fund admin partners like Circle to monitor the ins and the outs of those LPs. So there's a very close partnership with, the banking community like us at Wintrust and with the administrators.
And this is kind of another follow-up question to that. What would you, and Nick, feel free to jump in as well. What would you say if, there's a fund manager that's saying, no, this is like my local bank or, whatever it might be, they said they can do it or they want to open an account there. What's the question that they should be asking that financial institution to make sure they actually support that?
That's actually a really good question, and it's a lot of phone calls that I often get. So very similar, Jen, to what you just mentioned. Oftentimes, hedge funds will say, oh, I already have an existing relationship at Bank XYZ. They'll open my account. Oftentimes, the case is that a local branch will open up the account for the hedge fund. But what ultimately does happen is down the road, they find out that they're not able to support the ins and the outs. They realize that, hey, we don't want to look after these third-party accounts with money flowing in and out. So once the AML, the compliance team finds these accounts, oftentimes they ask them to leave. And that's when they'll call us saying, hey, we're in need of a new banking relationship, one that we can count on for a long term. So that's when they'll give us a call.
Gotcha.
Yeah, David, you make some great points, David, and I'll just piggyback on a couple of those. When David also referenced, going to a local bank or an investment manager coming with an established relationship already, or especially if it's an emerging manager that says, yeah, you know what, I bank at the corner bank of, Smith and Wall or whatever it may be. A lot of times, they'll work with a branch manager, and the branch manager doesn't necessarily understand the hedge fund or private investment industry whatsoever. They don't realize that third-party money will be coming into those accounts. They also don't realize that anti-money laundering and KYC requirements probably won't be adhered to, or they'll be done internally via Google search, but not really using a highly robust piece of technology. For example, we utilize WorldCheck, which is quite often used by many other, admins within the space. And when we're opening up a banking relationship like we did with Wintrust, we're fully vetted. So all of our documents are vetted. The banking institution like Wintrust has done all of their due diligence on us. They've also looked at any one of our SOC reports, our ISE 16 reports, any of the auditing documentation that's been done on our firm is reviewed by, the financial institution like Wintrust. So we're fully vetted. And then all of our policies and procedures that are reviewed, whether it's, throughout the year, et cetera, and then updated is reviewed by the banking institution. And then they're relying on us to make sure that nobody comes in from a subscription redemption unless they've been fully vetted. They're not on any of the OFAC lists. They're not a politically exposed individual. They don't have criminal activity. So those are some of the key functions that are played. And in addition to that, I just wanted to add, it's really important to work with a banking partner that does have established relationships with administrators for several different reasons. One, it saves time with the onboarding of those accounts. So Dave's team and my team work hand in hand to open up accounts very quickly on behalf of the investment managers that are coming in. Then on top of that, there's a money saving, there's a time saving that comes into play, which is really key because the investment manager reaping some of the benefits of an entire group of investment managers that may get reductions in certain type of fees. So that's also a real key for some managers that they don't realize that's key. So I just wanted to share a couple of those little pieces with you.
No, absolutely. And that leads me into my next question I had, is how banks and administrators work together and what type of communication, really happens behind the scenes. And I wanted to proffer that question to both of you. If David, you want to take over on your side of things, and then Nick can jump in.
Yeah, absolutely. So a lot of what Nick had just spoke about is absolutely key on our side. Managers get to take advantage of the relationships that are typically established or pre-established by banks and fund admins. So prior to onboarding any fund admin, us at Wintrust, we do a thorough, as Nick had mentioned, due diligence on any fund admin. And that checks into just what he said. We make sure that they're doing their proper AML KYC, that they have their SOC certification, which means that they're secure. So we will do all of those necessary checks prior to onboarding, and we'll only onboard with premier fund admins just to ensure that all of this AML KYC is adhered to, because as we had mentioned earlier, some of the subscription redemption accounts other banks may deem kind of risky. Second is just this pre-established working relationship. We're able to work with partners, with Circle, and open these accounts quickly. Onboarding tends to be a big challenge. Onboarding bank accounts tends to be a very big challenge just in general in the investment management community. Banks are notoriously difficult in opening up accounts. By having these already pre-established relationships, as Nick alluded to, we're able to kind of bypass a lot of that and get an onboarding typically within less than 2 weeks, and oftentimes a lot quicker. And then again, there are the cost savings that are there just because of these established relationships. There's no fees on certain certain processes and transfers.
And just really
and Jen,
sorry,
if I could jump in too.
Yeah, go ahead.
Yeah, go ahead.
Well, no, I was just going to follow up just really quickly on that, just while you're on that train of thought, David, is what does the process look like then if, a manager comes to you and says, I'm working with XYZ administrator, and you don't have a, pre-existing relationship with that administrator? How does that have a significant delay when you have to now go through that whole process?
That would be. So if Wintrust currently works with over 37 fund admin, all the premier. We, prior to working, as I mentioned, with any of these managers, we at Wintrust will do a due diligence process. So we will go through a full kind of peeling back the layers of, again, what Nick and his team do in order to understand the AML KYC. So our initial onboarding of a fund admin, SOC certification is huge, is approximately a month, that initial. Once the established relationship is there, as it is for most fund admins, then thereafter it's 2 weeks. So working with a fund admin that's vetted by, Wintrust certainly helps.
Right.
And saves a lot of time.
Yeah, That makes sense. Nick, go ahead on your thoughts on the questions.
Sure. Yeah, and David hit all of the points that I was going to reference. But there's a couple of additional things I'd like to add to it from an admin perspective. So it's imperative that any investment manager that comes to us is going to utilize what we would consider a Circle Partners approved banking relationship, and obviously Wintrust is one of them. It's just a much easier process. We already know how to utilize the platform itself, which is much more efficient than learning maybe a new system or somebody that doesn't have a highly robust piece of technology that allows you to conduct the wires and all of the other documentation. But prior to us even going to David and team for a new account, there's that established relationship that comes into play. Like, for example, yesterday I had a conversation with David specifically about a potential prospect. So before we even went through any of the logistics, we had a quick call, and I said, listen, this is what I'm thinking. This is a client, a prospect that I have, and I believe this may fit into the mix, or it may not.
That's right.
So we had a quick conversation about that, and then we came to a quick conclusion. So that enables us to streamline that process on behalf of any of our clients. In addition to that, before I go to Dave also and his team, to open up and fill out the documentation on behalf of our investment managers, we've already vetted the fund itself. So we've done the anti-money laundering on the fund. We've done it on the investment manager, on the general partner, on any of the owners of those entities themselves. We've already done all of that vetting. We house internally a legal team, and the legal team within Circle Partners actually conducts also part of our due diligence and compliance on the legal docs of any of the entities that we're going to work with. So that kind of sets us a little bit apart from some other admins in the space. So we've fully vetted all of the investment managers' logistics before we even get to the bank opening process. And that's then how David and his team at Wintrust understand that we've already done all the vetting. We're housing all of the documentation, and we're more than happy to then share that documentation on behalf of our client with the banking institution to be able to get those accounts opened very quickly.
And then again, and Nick, you're spot on that. And the way that the banking relationship and the fund admin works is, once the fund admin has done their vetting, believe it or not, Wintrust will do our vetting as well. So again, independently, everything will get vetted through the investment manager. We still do dot our I's and cross our T's. And then in addition, what's nice about partnering with, fund admins like Circle is that, Wintrust and Circle can help facilitate the paperwork back and forth. Oftentimes, the paperwork is pre-filled out, made very, very simple and easy for the investment manager, because we do recognize that that it can be sometimes onerous.
Right. At what time, Nick, and David as well, this might be more specific for Nick though, at what point in the engagement or post-engagement, when does that due diligence process for the managers come into play? So it seems like a lot of work, to be doing prior to engaging a client, but I mean, what happens now if you engage and something?
Yeah, absolutely. So from our perspective, it's, we do a couple of things very early on. So when we first have a conversation with an investment manager and we are considering a proposal, we do run actually what we call a preliminary check on the investment manager. So what it does is it's very prelim. It's not as in depth as a check that would be conducted later on down the road. But that check enables us to get a very quick high-level overview and say, did anything immediately come up and flag us on this investment manager or this fund? And this is at the very early stage of the proposal itself. So we already know before we get through the in-depth of a full proposal, all of the details, whether we have an idea if there may be an issue that would come up or arise. And it's a conversation also that we have with any of the investment managers. We let them know up front, listen, we're going to have to do our due diligence. It's part of our AML, KYC policies, et cetera. And usually at that point in time, you get some sort of, flag if there's going to be one. But our in-depth due diligence really starts after the proposal is agreed upon. And when it's agreed upon, then our compliance team will take all of their legal docs. So for example, Jen, obviously we work with Capital Fund Law Group, who does a tremendous job with drafting the legal docs, et cetera. And when we would receive them from your organization, we obviously know that I's have been dotted, T's have been crossed, et cetera. We take all of those legal docs and then we'll run our due diligence on those documentation themselves. And then we'll also run the AML and the KYC on any of the investment managers. So we require their passport, proof of residency. It's got to be something within 3 months. So for example, it may be a utility bill, a phone bill, or something to that effect, along with obviously a copy of their driver's license. And we utilize that to run due diligence in the WorldCheck system. It also gets linked to our piece of technology, which is terrific, which enables us to understand and know if any sort of documentation even down the road becomes out of scope. So meaning it's expired, maybe a driver's license or passport or something is expired and needs to be updated, or a piece of documentation needs to be updated. Our piece of technology that we track all of that data and flags us on it, and then our compliance team will go out and on behalf of the investment manager and collect that data.
And Jen, I would just share from Wintrust perspective, a banking side, we do our due diligence. Nick and you guys do yours obviously far before we do. We actually begin our due diligence process once we have a signed relationship with a fund admin like Circle. So we don't actually begin any onboarding until we know that there's a fund admin on board.
Good to know. Yeah, I mean, you got to give them credit if they manage to get past legal and then admin to get to you, and then an issue be raised. So
that's right.
This is out of my own curiosity. It came up as you guys were chatting. How has that due diligence process changed, if it has, with everything as virtually saturated right now as it is? Are there additional steps and lengths that you guys as providers are needing to go to meet those compliance requirements?
From a banking...
Go ahead. I'm sorry, Dave, go ahead.
Oh, I was just going to say, from a banking perspective, no, our requirements have remained the same. We too rely on kind of independent systems to do our checks of the LPs. And then again, we rely on, fund admins, Nick and his team, to do the periodic checks for the LPs coming in. In addition, we will continue to ensure that the fund admins are doing those same checks year over year by conducting our annual compliance call with them.
So Jen, to answer your question, it depends also on the jurisdiction. So for example, obviously we're, Circle Partners is a global organization. The way things are handled in the US are a little bit different than abroad. So for example, abroad, any type of, passport, utility bill, et cetera, needs to be also certified to ensure the validity of it. So that's a little bit of a different requirement in certain jurisdictions. Obviously, if we talk about Cayman Islands, our organization abides by all of SEMA's rules and regulations, along with obviously the BVI, and in different jurisdictions across the globe. So we do evolve as those regulations continue to change, and our compliance team and legal team will constantly provide not only our internal staff with updates, but obviously also our investment managers that are located within those jurisdictions with updates as requirements continue to evolve and change over the course of time.
That makes sense. Thank you guys for that. And I think one of the things that they don't necessarily, need to be fully aware of, but, it's good to know how heavily communication happens on the back end with, different providers, and how, closely we work throughout the launch process and even afterwards with administrators and banking and audit when things come up. It's really a team that managers need to focus on bringing on that can communicate well together, not just with the managers, but with each other. So I wanted to just ask real quickly, because we've seen a bit of an uptick when it comes to incubator funds being formed, and managers taking that first smaller step towards a full fund launch, and testing the waters a little more with how everything is going these days. How does this phase, the incubator phase, where they're not accepting outside investors, maybe the compliance isn't as heavy? First, David, how does that work in terms of banking for an incubator fund?
Right. We do often see a lot of incubator funds coming through to Wintrust. And so typically they're going to work the same way that a traditional hedge fund will work. And that, again, is working with the fund administrator. Wintrust is a economically priced bank, so cost typically is not a factor. But for the confidence of the investors, for the security of the admin and everyone, having a solid banking established relationship, we think is kind of key and has proven beneficial for these incubator funds. So to answer your question, the banking relationship is really the same as it would be for a larger hedge fund. No real difference, Jen.
Okay. And Nick, same question for you in terms of administrator.
Absolutely.
Why should a fund manager have an administrator during the incubator period?
Yeah, so if you think about it, and I agree with everything that David said, when you think about an incubator fund, right, what's the whole purpose of an incubator fund? It's to really create a type of track record so that there's some sort of validity in that track record and a verification in the track record. And you're really testing, your strategy itself, right? So you're trying to figure out, does this work? Does it not? What are my returns going to be? And then can I go out to the greater market? So if you think about it, every fund manager, regardless of size and scope and whether it's an incubator fund or not, with just friends and family in it, it still needs to have transparency, oversight, and a compliance aspect of it. So, one of the big keys is to say, listen, if you're creating an incubator fund and then you're going to eventually go out to the market, do it right from the start and set it up correctly from the beginning. Once you set it up correctly, you have policies and procedures in place. So now when you've taken your legal docs and you've already had a track record that's now verified and vetted, so you could actually go out to the industry and say, yes, you know what? I had an incubator fund. I was testing my strategy. It's verified by this third-party administrator, and these are the true and accurate numbers, and these are my accurate results. That goes a long way, because now an investor is looking at that and they're saying, you know what? They've done it correctly from the beginning, and they're not just evolving They're really understanding the right policies and procedures, which is really key for any investor to consider when they're going to put money into a fund. Was it done correctly to begin with? And then is there really true validity to the numbers that I'm reading? Also one of the things to consider is that you're going to take an incubator fund and you're just going to adjust those legal docs, which you guys would do all the time, to maybe an approved fund or whatever, to have your LPs come in, So realistically, why then go through all of the changes, especially if you're not using an approved administrator and a vetted platform with a financial institution? Now you're going to have to make changes to those relationships and to the structure that you've created or that you haven't created. So if you don't have a banking institution, an administrator, you're not using a vetted platform, now you're going to have to create that once you change your incubator fund to a regular fund to bring in LPs. So why not do it correctly to begin with?
Yeah, no, that's an excellent point. David, did you have some follow-up to that?
Absolutely. Well, it's really, as Nick has suggested, a lot of these incubator funds and emerging managers want to walk away with that track record, and investors want to see that. So having that independent admin prove and verify that performance, rather than an emerging manager simply saying, well, this is my performance based on, this book. If it isn't verified, typically it's more difficult to have the investors actually invest. And again, this is what I kind of mentioned early from the beginning, just simply establishing the right relationships from the beginning saves a tremendous amount of headaches kind of as time passes, because moving relationships in the future tends to be difficult and kind of messy, where establishing these relationships early on and having service providers that you can grow into rather than grow out of is really a kind of a real nice to have, and a really great benefit of working with providers that all work together.
Yeah, Jen, if I can also just add to what David just said, getting back to one of your earlier questions also, if an investment manager that, say, has an incubator fund, just goes to a regular financial institution, say they do their regular, checking account, savings account, banking there, and they have an account opened up, what's going to happen is when they go to engage an administrator, whether it's us or somebody else, that administrator is going to say, you need to actually have your financial institution changed. So you're going to have to adjust it within your legal docs, because it's not a vetted platform, and most administrators want to use a vetted platform and a financial institution that understands the financial services industry. And there are not a great amount of them within the market that know what they're doing, have great platforms, and that are extremely highly efficient. So at the end of the day, that account is actually going to be need to be moved. So why not just do it correctly to begin with?
Yeah, I completely agree with you both. I think those are excellent points. And, just kind of flowing into my next questions, which, are a little bit more investor geared. Nick, when you were talking earlier about the services that Circle provides, can you expound on what investor servicing really is when it's offered by an administrator or offered, by Circle?
Sure. Yeah, absolutely. So there's a couple of different sections when you think about administrators, right? You think about anything outside of the trading activity, right? So investment managers really focus on trading. That's what they do best, right? So they understand the trading aspect of it. They understand how to reconcile trades, and they understand their strategy exceptionally well. Well, an alternative section to the to the fund itself is investor relations, and that specifically focuses on the investors themselves, and it has everything to do with the investors entering into a fund. So for example, the first time that an investor comes into a fund, obviously there's a subscription document that's drafted. So maybe Capital Fund Law Group is the law firm on this fund structure itself. They've drafted those subscription documents. So obviously the investor has to fill out those sub-docs and then receive approval from the investment manager. But within those sub-docs, there's several different pieces of requirements. It may be your passport, your driver's license, proof of residency, and several other anti-money laundering requirements. So we help the investment manager fill out those sub-docs, or I should say we help the investor fill out those sub-docs on behalf of the investment manager to make sure that they're filled out accurately. So if there's any questions, etc., any documentation that may be missing, or any questions that they have, we are a resource for them. So we'll help them fill that out. Obviously, the investment manager gets that back. The investment manager does a review. We also do a second-hand review on those documents. The investment manager would then ask us to conduct the anti-money laundering and KYC requirements on those documents. We would run that due diligence on them. We would make sure that there are no red flags, nothing comes up that's out of the ordinary, that the investor is cleared, and we believe that their money is legitimate and there's no concerns there. We would then send documentation back to the investor and the investment manager saying that they've cleared compliance and that they are able to send in their subscription. So for example, that sub-doc is already filled out. We would then wait for their funds to hit their bank operating account, which the likes of Wintrust would have that account on file. We would see the subscription money come in. Now that would be under our control. So for example, we would see that the money comes in because we are the signatories on those accounts. And we would obviously then flag the investor and say, your subscription, so say it's, $10 million, your subscription for $10 million has been received for ABC Fund, etc., and we would send them confirmation. The investment manager would then come back to us, and we would, obviously, as we're letting them know that those funds have been received in that subscription, and then, for example, they would provide us with documentation and notification of where those funds would be moved in order for those to be traded, and maybe it's at their broker, etc. So we do that in several different aspects. Obviously, we are independent as a third party, so we are providing additional eyes, for those investors. We have a fiduciary responsibility for those investors. We obviously are preventing also, non-movement of money that shouldn't be moved. We also will work with, the investors if they have additional subscriptions. If the investors decide to redeem out of a fund, we would obviously conduct the redemption. We would do the calculation of that and send that back to them. So anything that incurs investor relations, we get involved in that process on behalf of the investment manager. And then obviously, in addition to that, we'd pay invoices and things like that for the investment manager itself.
David, when we were chatting the other day, you had mentioned the term four-eyed check when it comes to fund banking. And I kind of laughed to myself because the last time I heard the term four eyes was grade school. I hadn't heard of, that term. It obviously makes sense. But can you just explain that a little bit more on what that means on your end of things and what that provides?
Sure. Security is obviously key for everyone in this sector, right? Controlling assets, making sure that money is sent to the proper places. How is stuff and how is that really controlled? First, Wintrust provides a number of controls that are out there. First of all is, remember, let's keep in mind that the fund admins actually are controlling the Wintrust technology. As Nick alluded to earlier, he's the one who will go out and ensure once he's onboarded that a new hedge fund will have access to the Wintrust platform. So one of the controls that him and his team, we actually first will give we have what's known as dual controls, meaning when we give that access to Nick over at Circle, just to ensure that Nick is a good guy, we don't give full access to just Nick. We give access to Nick and to someone else at Circle. That way, all this is not on one person. There's dual controls. There's less likelihood of any fraud or any sort of kind of mismanagement. The term four-eyed check, that typically refers to when wires are entered into a system. So as Nick had mentioned earlier, when all this money comes in to the subscriptions redemptions account, when these initial wires are set up, right, all the money adds up during the month as investors send it in. Come the end of the month, Nick and his team will strike a NAV, and that means they open up their books. Any money that is flowing into the fund will typically get sent to a prime broker or wherever it's going. Anyone redeeming funds will get pulled back into the Wintrust account. Prior to those instructions being set up, a four-eyed check is typically when somebody will go in, they'll enter where that wire is going to, meaning it might be your prime broker. That's the two eyes. The second-eyed check is another person independently then checking to ensure that, okay, it's going from Wintrust, hedge fund XYZ into prime brokerage XYZ. So typically a first name party. That ensures that the wire gets to the right place. Again, another control that's put in is typically, and different fund admins do it differently, in the sense that at Wintrust you have the ability, for example, a fund manager can enter a wire and the fund admin can then approve it. So that then has a level of dual control, meaning no one party can go out and actually remove the funds without the other party knowing. I know the way Circle works is they actually control both sides. So they control entering and releasing the wire. So that is for protection of the investors and just to ensure that nothing is leaving unauthorized.
That makes sense. Nick, did you have any follow-up just on your side of things on?
Yeah, absolutely. So, and I agree with everything that David said. One of the things that he touched upon was the operating account. And, one of the things that sometimes, especially emerging managers, don't necessarily realize is that the operating account itself and the operating account that we're talking about is really just for subscriptions, redemptions, and fund-related expenses. It's not for any trading activity to take place. It's really just for those specific characteristics that I referenced.
That's right.
And then the path of a wire is really important. So whatever manner in which a wire comes in is the same manner within that it will go out. So what I mean by that is, so say a subscription comes in from a account held, for example, at an alternative bank. It may come in. We will document it that it came in from that bank. It should be listed on the subscription documents itself. It then may be moved to a trading account so the investment manager can trade. If that individual redeems, the money will then come back from the trading account to that operating account that would be held, say, for example, at Wintrust, and then it needs to go back out to the same account it originated from.
Right.
So, and the path of the wires is very important. And that's obviously to avoid, money laundering, et cetera, where money's coming in from one, then going out to a different account. And there would have to be good reason why it didn't go back out to the same investor's account number. So say maybe a banking account was closed We would need to see documentation on that, make sure that it's appropriate, et cetera, for any monies to be, sent out as a redemption in a different manner. And that's, as David was talking about, the 4I check. We receive all of that documentation for every wire that needs to be, conducted. So we want to make sure that we're vetting all of the wire transactions through the proper documentation.
Right, right. And I mean, obviously, I think that gives the investors, again, that additional level of confidence that there are so many eyes on what's happening, as well as, for managers to know, their team is taking care of that back end side of things. Nick, if you can just explain a little bit more while, we're on this line of thought, the AML and KYC requirements, and your role that you play when it comes to these procedures.
Yeah, no, absolutely. So, we play a key role, and one of the things that I think folks actually forget about, especially in the emerging manager space, and I know when we were talking about like incubator funds earlier, when they evolve to a regular fund, there's going to be an audit that takes place. So one of the key things is that you don't want to not have a highly satisfactory audit, put in place. And one of the key things that's looked at, within that audit is obviously the policies and procedures and the AML and the KYC that's taking place, especially on your cash management. So as you're moving funds, the auditor is going to kind of look at some of those things and say, did you really cross your T's? Did you dot your I's? Why is maybe some of the documentation expired? Those are difficult things without a fully automated system to understand, and the auditor is going to look at that, and they're going to track and see where your AML procedures are. So we help to really, handle that piece, whether it's friends and family, doesn't make a difference. You have to have policies and procedures and systems in place, and it's very expensive for a small fund manager to purchase some different type of pieces of technology that are going to be fully automated to know that they've abided by their KYC and AML requirements. And the last thing you want to do, as I previously mentioned, is have an audit conducted, and then the auditors say, hey, I know these are friends and family, but their driver's license or passport is expired. Where are the new documents? So there's a lot of small, intricate pieces that come into play when you think about anti-money laundering, and systems are imperative, and knowledge is also key.
Exactly, Nick. There's a lot of ongoing things to keep things clean that a lot of people don't think about, and those are things that the admins are doing in the background that typically goes unnoticed a lot, but are imperative.
Right. We had chatted about this as well the other day. Why do some established managers have alternative fund accounts at a separate financial institution? So why do they have two banking providers for a fund or for their management?
Yeah, well, absolutely. And we've seen a lot of, we've gotten a lot of calls over the past couple of months. So typically, some of the larger investment managers will have dual bank accounts for two reasons. One is at Wintrust we support Cayman and BVI funds, so oftentimes other banks don't do that. So we end up with this Cayman or BVI entity in some instances. But another real kind of good reason to have a secondary bank account is simply just for access to it. And I say that because obviously with what's going on with being at home and the sudden kind of changes, there were a lot of kind of other institutions, other banks that weren't picking up the phone. They weren't providing the services that were expected. Having that secondary bank open, we got a lot of calls from managers asking, hey, are you offering this product? Hey, can you do this for us? We have an established relationship. And the answer was, yes, we can do it. And the positive thing is we could do it right away. And that was because these managers had gone out and proactively had this secondary bank account with us. And so what I think it's beneficial for, and for some of these larger kind of multi-strat clients to think about is, hey, establishing these relationships now, being proactive, having an alternative bank is a real positive and a real value add, because things change quickly. You just simply don't know what's going to happen, and having somebody pick the phone up when you need it proves really, really beneficial.
Absolutely. But do you see it on open end as well as closed end funds? Does it really matter what type of fund they have to have that?
No,
security?
it doesn't matter. No, absolutely not. One thing, both open and closed end, what we do and what we do well kind of at Wintrust is opening up accounts quickly. So we found with like we said, both open and closed end, having that ability when a CEO or a fund manager needs to get an account opened quickly, having options, very, very similar, as I said, and I think about pre-2008, everyone worked at and had a prime broker. That's why the name is prime broker. After 2008, everyone had dual primes. They had two just because of the crisis. It changed everything. I think, and I feel it's really, it's an important thing to think about for these larger managers, just to have that ancillary bank open. And at Wintrust, we don't require any sort of ancillary services, so we're happy to comply and happy to work as a secondary partner.
Well, and it's such a, correct me if I'm wrong, a nominal fee. I mean, it's so, minimal for the security and the comfort of having that option to just have that account. It seems to just make sense.
That's right. It's just there when you need it, because it proves beneficial. And during this period, we've seen it many times over.
Yeah.
Yeah, I would say it's like the old saying, you want to keep eggs all in one basket, and I would agree with what David said. You really want to diversify. Diversity is healthy. The last thing that you need is for a financial institution to say, you know what, this is a real drag on our balance sheet, and maybe it's a market right now that we don't want to be in. What do you do if you're an investment manager and you only have one relationship? It's not necessarily healthy.
Right.
So, having a couple of relationships is definitely healthy. It doesn't mean that you have to spread it out 50-50. It just means have that option if you need it, which is key. And that's one of the pieces that we help with. We'll talk with our investment managers and say, what are they looking for? What's the goal of it? What kind of administrative work do they want us to do for them? And we'll customize it. We'll meet their needs, and we become that extension of their business. We become that true partner. But diversity is really key, and it's important, especially if you're only utilizing one financial institution. Like I said, though,
Right.
It doesn't mean that you have to move all the money across both of them.
What are, just a couple of the top things in those first couple of conversations with an administrator that a manager should be asking and should be looking for? What are those indicators that this is, going to be a strong provider and part of the team? Or even the other side, what are some red flags that maybe they should keep an eye out for?
Yeah, I'm a firm believer in response time. I think response time is really key in any aspect. When somebody's even requesting your time, even if you can't have necessarily a full-fledged conversation, it's about the response time. So, and what I mean by that is, at Circle Partners, we really believe in a true partnership, and we want to make sure that regardless of size and scope, that we are there for our clients. So when you're talking to a fund admin, the key thing is exclude pricing out of the mix, right? Because it's really about service, and service is the key thing, from an administrative perspective. So what kind of service are you going to really be getting from your admin? Are they going to actually pick up the phone and answer questions when you call? Because an investment manager, time is money, right, to them. So what's really important to them is that they're not necessarily spending time on the phone doing something outside of the scope of making their investors money. So are you going to also have consistency in the team that you're working with? So, for example, stability and turnover. Bigger is not always better in an admin. Sometimes the larger the organization, the larger the turnover. So that means that you're not going to deal with the same person over and over, whether it's on a monthly basis, if you have monthly NAV or quarterly NAV. Maybe you're not going to deal with the same person year after year on the audit. Those are key things to understand. What's the stability of the firm that you're working with? What's their customer service look like? And I would say, quite honestly, prices usually should be the last consideration. Because if you're really investing other people's money, you want to make sure that you're doing it efficiently and at the highest level that you possibly can. So I would say that those are really key. I would say, in retrospect, you said some of the negative things, the lack of feedback, lack of response time. If you don't get a prompt response day one, or you're not getting feedback day one, then what is it going to look like when all of a sudden you've engaged that admin and they're not getting back to you, and you actually have a question that needs to get answered because you need to get back to one of your investors that is investing a significant amount of money in you. And then the last thing I would say that's really important is relationships. I really believe that you have to be able to build a relationship with the folks that you're partnering with and feel comfortable with them. I know that I like doing business with folks that I like and I feel comfortable with, and I know that I can trust, and that if they don't have an answer for me, they'll find out the answer and then get back to me in a timely manner. So hopefully that answers your question, Jen.
I agree 100%. I think that those are very important. And David, I'm sure some of your answers might be similar, but what should they be asking when speaking with, their banking provider?
Sure.
Looking for?
Yeah, Nick, I couldn't agree more with really everything you said. Really, from a banking side, it's commitment to the sector. You want to, as we had discussed earlier, you want to make sure that the bank you're going to is committed to the sector, that they're not going to be in it for a period and then potentially get out of it for a period, and you may have to move. That's really key. Service as well. You want to make sure that when you call a bank that somebody picks up. Nick, you hit it on the head when you said the larger is not always better. There's a whole industry of kind of boutique service providers like Capital Law, like Circle, like the Wintrusts, that are eager and want your business, and they're gonna pick the phone up. They're gonna get back to you. We're not doing you a favor by taking your account. So to me, it's commitment to the business, service, and just partnerships, as Nick had mentioned as well. Just working with folks that you like. We have dedicated managers that cover clients. So it's a very high touch service, and costs, like Nick said, cost should not be a factor. You need to work with folks you want, because this is a long-term relationship on both sides.
Both of you are very proven in your willingness to pick up the phone and answer questions, because I call you both quite frequently with questions. So thank you. And I appreciate you both being here so much. Contact information to get in touch with both of you is going to be on the slide accompanying this recording. And again, I appreciate you both being here and sharing all of this information.
You bet. Jen, thanks a lot. Nick, always a pleasure.
You've done a wonderful job. We really appreciate it and look forward to working together for a long time.
Thank